Good day, traders. How we doing today? Not much movement here today. There was news today too, I think, wasn't there? I don't know. I didn't look. It doesn't usually affect me, the news, unless it was FOMC like yesterday. That doesn't affect me either because I'm not really trading at that time. So that's a dangerous time. Okay, so we're looking at the NASDAQ 5-minute. If you look up here, you'll see up here up top, 5 minutes. See, right here's my arrow. It's a 5-minute chart. Okay. So if we're going to come into the US session, which starts right here, where it turns into this gray color, okay, that's 8 o'clock. So we come in, we put in a low here, a retracement, a lower low. There's no trade from there to there. So I guess if we shorten the span to look at it, we go from a low to a lower low, or I could go to the 1 minute. Let's just look on the 5 here for now. So if you would have bought it here, okay, you bought it right on the opening of this candle. Stop would be 36 points. Did it go up 36 points? No. And it came back down. The stop would be here, but after it coming down, like back down here, I would have got out myself. So that would be like a 16-point loss, let's say. Okay. And then we came down. We wouldn't have hit the stop and then go back up, but still, I wouldn't be in the trade. I would have been out. So I say we had shitty movement today, very shitty crap movement, and then it went back up, right? So then now we're creating. I guess you could say, yeah, if we flip it over here like this, close enough, right? And we go like this. Okay. There's divergence there, right? Right. Double bottom. So if you would have bought up here at the opening of this red candle, the close of the big one, that gave us the cross up. So if you bought it right here and your stop was here, 35 points. Did it give us 35 points? No. It only gave us 30. Can you see how I'm saying there wasn't much movement today? There was no follow through today. You never hit your 1-to-1 target here either. See what I'm saying? But we do finally have a trade on the fucking 5-minute. Excuse me. I wasn't even trading this today either. I still didn't trade this week. I don't know what it is. I have some feeling in me. Don't trade. Just leave it alone. I don't know why I have this feeling, but so I'm leaving it alone. But anyway, so we have a high and a higher highs right there and right there, right? So they just smacked it all the way down here, right? So where would have you got in? Well, according to my rules, you'd get in right here at 16,600 or wait for a retrace, some kind of retrace. But let's just say we got in right here at 16,600. Your stop would have been 62 points. Did we get 62 points yet? No. 47, but it might come down later on today and give us the 67 points. It was just crappy day, man. It's just full of crap. But let's go look at the 1 minute, because I think that's what we should have been trading, is the 1 minute, because there's no movement. And it looks a whole lot worse here with the 1 minute. Yeah, there's divergence here to buy it, but still you would have been buying way the fuck up here because before the 5 crossed up over the 7, it was a big run up. It wasn't good, man. It wasn't good. Then they took it back down. Then they took it up. Here we got higher highs, okay? Here's the one good trade right here. Okay, it was divergent. So if you would have sold it here from up here, it's 32 points. Stop. You would have got that 32 points right here. Yeah, you would have been better off trading the 1 minute. Let's just do the 1 minute. Now, I showed you on the 5 minute, there wasn't much. There was like one trade. Okay? Let's check out the 1 minute. Let's make it bigger. Take off the auto scroll and come back here. Okay. So we had a low and a lower low. Got all these freaking lines on here now. All right. See, look at over here. Look at this shit. Look at that crap. It's hard, man. Hard to trade. They're just chopping up people today. That's what they're doing. And watch tomorrow, Friday, we'll have nice moves. You bet. You wait and see. Mark my words. Today they're fooking everybody. Right up their nose. Right into their brain. Tomorrow it'll be good, I betcha. We'll see. We'll see tomorrow. Okay. Let's go back here. Here's the opening of the USA session. So we got a low retracements, lower low. And we got the low and the higher low. We would have entered right here. So we would have got short right from here. Your stop would always be the closest swing low, 20 points. Did we get 20 points? Oh, yeah. Got it right here. Actually, got it right here. Just by the skin of your nose. So we'd have got it in like 4 minutes or so. Then up here, we had a high, a retracement, and a higher high. Okay? That's divergence right there. You would have sold right in here. I don't really look for the higher close, sell it, down it goes, trades, because we're on the 1 minute. So just looking for the divergence trades. So you would have sold it here on the opening of this candle. Your stop would have been like 15 pips, points, whatever you want to call it. And down at the bottom, you got 35 points. So you would have been good. Now, down here, is there divergence again? Oh, yeah. Every time frame, ladies and gentlemen, we have divergence. Okay, we got low and lower lows. And right there. See, but see how I wait on the, for the cross up to enter and everything? Would have entered way the fuck up here. That wouldn't have been good. You'd want to wait for a pullback. So say you waited for a pullback right in here and you bought it. Say you bought it basically right in here, a pullback. Jeez, I hate when it buries the arrow. I don't know why it does that. Does that have something to do with this? Yeah. No, it's still doing it. I don't freaking know. Anyway, so if you would have got in here, right here, let's say, up here, your stop would be here, 30 points. Did we get 30 points? We just got 30 points, see? And then up here, do we have a trade up here? Yeah, we do. We have a high retracement, higher high, right here. See that? and you would have got in right there on the opening of this candle. So if you got in right here, your stop would be 32 points, and it went down 40, so you would have got your money there. So you had 3 trades, a sell, a buy, and a sell, and they all worked out. By then, you should be done. Okay? Done for the day, but who am I to say? But then it went into shit, as you can see. Total rubbish. Okay, that's the NASDAQ on the 1 minute. Let's take a look at the S&P. See how crappy it is on the 5 minute? Look at this. This is the 5 minute, man. Look, right up here. See? 5 minute. Look at this shit. We have a double bottom, or a low and a lower low. But look, this one's lower than this one. It's not divergent to buy right here. It's not divergent. And then we have high retracement and a bunch of goddamn whatever. That must have been the stock market open. Yeah, 1630. See, that's the stock market shit. That's like trading non-farm payroll. Don't trade the fucking stock market open. It's going to chop you up and kill you. See? See the zigzag, 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 zigzag. You know what I'm saying? Like I showed you last week, if you were watching, that is. When it starts zigzagging like this, looks like you drew something with your, your hecto set or whatever that, exacto set. Oh, maybe they don't even have those today. Who knows? Anyway. Yeah, you could look at it as divergence if you really wanted to try and find it. I would run for the hills. But there was divergence. And you would have entered right there on that candle. Excuse me, tired. Okay, so you would have sold right here in the opening of this candle. Would you have really wanted to sell right here after this? I wouldn't. But let's say you did. Your stop would be at the top, swing high. 11 points on the S&P. Did we get 11 points? Hell no. Only got 9 points. See? It's chopping up again. Crapola, man. Crapola. Let's move on. Not going to look in the 1 minute on that. Let's look at the Dow now. Okay? Even the Dow. Look, there's no follow through. Do you see that? Where's there a trade here? See, it's basically the same algo as the S&P. There's a nice double bottom here, but this valley's deeper than this one, which makes it not 100% not divergent. And the same thing up here too. If we have like a high, a retracement and higher high, there's no divergence up here to sell because this mountain is bigger than this little molehill down here. So in order to find some divergence, we would have to go down to the 1 minute time frame. Okay? And I'll show you. Okay. So say, here's the opening right here, 8 o'clock. So we went, la-di-da-di-da, sideways, da-da, 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 up and down, taking out people's stops, bringing it up here, because people are going to go, oh, I'm going to buy, it's going to go up, it's going to go up. And it goes back down, and they put their stop here, and they got their stop. Then down here, they go, oh, look, it's going down, I got to get in, I got to sell, Yes. It's going down here. See? Look, 4 candles, 3 candles. Look at the cross. See? Oh, I got to sell. And what happens? They put their stop right here. And what happened? Here, they scared the living bejesus out of them. And then they took it down again and got more sellers tricked into selling. Oh, see, it's going back down now. I'm good. It's going to keep going down. I know it is. I know for sure. And what happened? They sold more down here below 37,200. Well, on my platform, that's what it says. But on the real futures contract, it's some different price. It's not. So anyway, what do I see here? Well, I'll tell you. This is a consolidation, so you really don't want to trade consolidations. But right here, I see a double bottom right there. Okay? There was no other divergence up here. People where I was getting excited saying, oh, I'm going to sell here, oh, I'm going to sell here, oh, I'm going to buy here. I'm just telling you what other people are probably doing. You want to wait for it to come out of there. Anyway, so here's the divergence right here, ladies and gentlemen. Here's the real McCoy, the real trade, which would have been way over here. Why way over there? Because the right situation was present, which is in my course. But anyway, right here, we would have got long. Our stop after that would be down here, because you can see they went after the stops. They went after stops here, stops here, stops here, and stops here. Okay? 3 times they went after the stops in this up, down, shake them up, shake them out situation. But we would have got in way over here. And our stop would have been 30 points. And it went up 100. Okay? Then up here, this is still the 1 minute, ladies and gentlemen. We have a high, a retracement, and a higher high. Down there like that. You would have got short from up here. And it went down. Now this is before the U.S. stock market opens, okay? So you would have been in this trade before. So your stop up here was like 27, say 30 points, 30 points. You would have got your 30 points, man, right here. Before the stock market opened. The stock market opened right here. Actually, this blue candle with the big long wick. Okay? And then it kept going down. So anyway, that was the trade to get in there. You would have got out long before the opening of the stock market. And then it came down here and put in a low, a retracement, and a lower low. But because this part of the OSMA is lower than this side, okay, there's no trade to buy here. No divergence to buy it here, ladies and gentlemen. However, it went up, it retraced and went higher, higher highs. Remember I told you, you're always looking for higher highs on the top side of the chart or somewhere in the middle. If it just created it, like right here, somewhere in the middle of this big move down, here it is, right? You're looking to sell. If you got lower lows on the bottom side of the chart, see right here, this is the bottom, right? Then you're looking for buys. And I just showed you that there's no divergence to buy here. Okay? However, we have a high, a retracement, and a higher high. That is valid because it's up. We would want to see it more so up here, but still it's in the middle. It's up high. Like we're not trying to sell way down here. We're trying to sell a retracement in the trend. So anyway, you would have got short right on the opening of this candle. Our stop is always at the swing high. Right here, 44, 45 points. Did we get our 45 points? You betcha we did in about 1, 2, 3, 4, 5, 6, 7. In 7 minutes we got our 55 points. We got our 1-to-1 right here. Was there more divergence? Oh yeah, there was. We have a low, a retracement, and a lower low. See, this is a 1 minute chart, ladies and gentlemen. This is the Dow. Would have got long right in there. And it did work for us because our stop was right here, 32-point stop. It came down and scared the bejesus out of you. It went down 23.5 points against you, but it did not hit our stop. And it went up 50 points. There's your 1-to-1. And then we had, well, there's a trade here too, actually, right here. You would have bought it It's hidden divergence. From this wick to this wick. The two pullbacks. And here it is right here, see? And we would have got in long right here on the opening of this candle. Now let's see. We would have bought it here. Our stop would have been 42 points. It only went up 22 to there. Then it pulled back on you, but never hit your stop down here. If you would have held on, did we get our 42 points? We did. It went up 48. You just had to go through a little bit of rough terrain, you know, in the jungle. Woohoo! You're bouncing off your seat in the Jeep, right? Just a little bit of a rough ride. Yeah, that's all. And that's about it. I would say I would have gave up after that. And there was like 1, 2, 3 trades. No, 4 trades. Here was 5 trades. One here, a buy, and it was a beautiful trade. This one was a beautiful trade. I would have gave up after these 2 trades. And then we had more. See? No divergence to buy here. High, retracement, higher high. We had a trade to sell here. Hit the target. Then we had lower lows here. Buy it. Up it goes. You know, and here's another one. Hidden divergence right here. And it worked out. All right. Much better in the 1 minute today because there was no follow through on the 5. Let's look at the pound now. Let's try and go through this quicker today. Okay. This is 8 o'clock. We're on the 5-minute pound. There's no trade here to buy it. There's no trade to buy it here either. There's a trade here. Hidden divergence. This is the 5-minute. I'm sure if we went and looked at the 1 minute, there's probably trades in here. Let's take a quick look. I'm just going to look. I'm just going to show you, but I'm not going to draw them out because it'll just take too long. Okay? Here's the 1 minute. Yeah, see? Right here. Draw it from here. Well, I'll have to draw out this one because it's a little complicated. Somewhere in there. Say you would have got long right here and up it goes. Then up here we had that sideways shuffle here. But we had divergence here. I'll just put the lines on. Right here. No. I don't even think there is divergence here. I don't know. Shit. No, there is. I think. Yeah. Yeah, there is. Right there. And you would have sold it right here and down it went. Then we had hidden divergence here from here to here. Right? From here to here. And here to here. No. No, there's no divergence there. It doesn't line up. It doesn't work. It doesn't work here. The divergence is right here. There's one here to buy it. It went up. Went up 42 pips on the pound dollar. And then we came back down and we had another one right here. Okay? Another buy. 2 buys. A buy here and a buy here. Just like that. And then it went and did some more shit crap over here. And then over here. It was kind of mixed up. Yeah, I guess you could say there was a double bottom here and buy it. Went up 30 pips. There's actually some good trades on the 1 minute. Everything today is the 1 minute because of the way the market's moving. Let's take a look at the euro. It's probably the same. Yeah. We have a double bottom on the 5 minute. It's right here. I've been doing long-winded videos this week. Yesterday it was 57 minutes long, but I did fill it with a lot of good stuff. I really did. So if you would have got long right here, your stop would be at the low, the swing low, 21 pips. And it went up. Well, we'll say to here, 52 pips. Then we had a smack up. That's what we had here. I'm seeing them more easily now. Right there. We had this one close here. It's a sell fake. Then the very next candle, they smacked it right up there. Okay? And you would have bought it right on the opening of this candle right here. But that's the smack up. So if you would have bought it right here and you use a stop at the low of that recent move, you would have had a 14 pip stop and it went up 32 pips. You would have got your 2-to-1 win-loss ratio. There's actually divergence right here. Let me show you this. I have to show you this. The high and the higher high, there's divergence, right? And it's beautiful right here, down here on the Osmo. It's a beautiful thing. It's telling you to sell right here, okay? Now let me show you something. That will say, no, don't do it, don't do it. You're going to get screwed. You're going to get screwed. Right here. And what do we go look at? This is the 5 minute we're trying to trade off of. We look at the 15 minute. Look. Let me ask you a question. Let me blow it up for you. Was the 5 below the 7 and saying it's okay to sell? No. It was above the 7. The 5 is this white dashed line. Okay? And this purple or pink line is the 7 EMA. Now, I like to look for trades for buy trades when the 5 is above the 7. I like to look for sell trades when the 5 is below the 7. Like right here. See? This was another. No, there wasn't divergence there. But do you see how just looking at the upper time frame and seeing that the 5 is still above the 7, and it would have gave arrows here saying, no, don't trade against the arrows. Because if you did, you would have lost. Because look what happened. It didn't go anywhere, and then they took it up, and your stop would have been right here. And right now, you would be getting stopped out if you held on. You see what I'm saying? So you use a higher time frame to confirm, should I sell or should I buy or should I just do nothing? That's how you don't get screwed in this market. Because always when there's a trend going up, there's retracements along the way. Here's the first retracement. Here's one. Here's one. Here's another one. See? So it would have told us right here, don't sell this, even though we have divergence. See the divergence? It's beautiful, sticking right out at you, and it's teasing you, saying, "Sell, sell, sell now, Jason, sell, right over here, sell." And then it goes up, and you get fooked right up your nostrils. That's why you don't sell. You confirm with the 15. 15 says don't sell. Okay, cool. We got her. We got her down. We got her. All right. I just got my last 2 drops of water. Okay, I hope that's enough to finish the video. Okay, I'll have to pause it and go get some more from the cooler. Yeah, I just picked up 10, I think they're 5-gallon jugs for my cooler. It's like an hour and a half from here I go and buy the water because the water here where I live is no good. It's no good to drink it. It's no good to even wash with it. It's full of lime. So I get my water from one of the Great Lakes that God has gave to us from the Ice Age meltdown. I don't know how many years ago, a long time ago. That's where I get my water from. It's pure, clean. How would you say? Fresh water. It's not seawater. Fresh water out of Lake Huron, one of the 5 Great Lakes of the world. Okay, so which happened to be in Canada and the United States. All right, let's finish this sucker. Okay, so I showed you that. That is like gold to you if you use my system of trading here. What I just showed you is gold. Instead of losing money today, if you would have done this sell setup, you didn't lose. And you would have made money right here. And if you just, oh, I'm so busy showing you this stuff. Let me delete this. Okay. Where's the next trade? It's right here. We have a pullback, a low, and right there. And we take this sucker. Oh, yeah. I'm kind of lost there for a second. Right here. Which is right here to here. See? It's actually lower a bit. It's this one. All right. There's a divergence called hidden divergence. And it was a winner. You would have entered right there long. Instead of getting sucked into the sell, the little pullback along the way of the trend up. Instead of getting sucked into that, you would have been a buyer right here. And your stop would only be 15 pips. Guess what? We already hit that 15 pip target. Gotta love that. 2 winners, 2 buys. Okay, let's move on. Pound yen. Oh, much more choppy on its way up, eh? And the pound yen. But there's still divergence. Geez, all these freaking things here. Why are they sticking there like that? I don't know. They kind of piss me off. I gotta remove them. I draw too many lines on the chart, I guess. I don't know. We had hidden divergence, ladies and gentlemen. See, this is the wrong one. Holy sheep shit. I gotta remove them all. They're just messing with me. Okay, here's the divergence. Let me show you. It's right here. Right there. A little tricky, this one. And right there. Yeah, right there. And right there. It was divergent. You would have bought it up here. Okay. You would have bought it right on the opening of this candle right here. Which at the time, this would have been at the top of the chart, freaking you out. So if you would have bought right here, because you don't want to buy the high of the day, that's at least that's what would be running through your mind. Because these charts are structured that because it's went up today, when you would have went to buy this, it would have been way up here. It would have been right at the top of the chart. But you see, after that, we made higher highs, higher highs, higher highs. So now the high of the day is at the top of the chart up here, not down here. Because every time the price moves higher, it drags the whole fucking chart up with it. And it deceives traders. Okay? That's why you got to go, well, when I do it, I'm going to be buying near the high of the day. Will I give her a go or what? So if you would have gave her a go, you did okay. Your stop would have been 45 pips on the pound yen. There's 44 pips right there. If you would have held on, there's your 45 pips right up there. You would have made 53 to get out right there. You would have been good. Okay, euro yen. Let's look at the euro yen. See what I just taught you there just now? That's valuable too. That's gold to you, man. Gold. Woo. Okay. Where's the divergence here now? We have that there. Not good, ladies and gents. Not good. I don't know. I don't see the trade there. Not very good one anyway. Where we need, we need the from here to here. Oh, okay. I guess I could put it like this. Here it is. Here it is. And right like this. Okay. There's your divergence. You would have got in long right there just after it broke out. You would have got long right there on the opening. But since it rallied up 64 pips on the euro yen, you'd probably want to wait and get a retracement back into the 5. Okay? So say you got in somewhere in the middle here. Your stop would be 38 pips. There's 38 pips right there, ladies and gentlemen. You would have got your 1-to-1. 80 up here. Yeah, you would have got your 2-to-1 up here. See? There we go. Let's look at gold now. Oh, gold was tricky. Very, very tricky. Yes. I see one trade. That's what I see. And you'd have to, add some imagination to it. Okay, double high. See, from the top of the wick to there, it's only 9 pips, man, or 9 ticks. It's no big deal. No, it's not perfect where they line up perfect. I gave up on those perfect setups a long time ago because I know that you're still getting the signal down here to sell. So even though it's not totally went up to this recent high, doesn't matter. It's like a double top. Most traders are looking at it. Hey, this is a double top. Let's sell this mother son of a gun, right? Let's sell it. So you would have sold it right there in the opening of this candle. So if you would have sold it right there, your stop would be 52 points. I don't think it. Oh, it did. Went down 61 points. So you would have got your 1-to-1 on gold. What about oil? Let's look at oil, the last instrument of this video today. Oil's bouncing off 72 bucks a barrel, according to this chart. It could be wrong, though. If you have the real futures chart, it might say something different. So, where's the trade? Where's the trade? Just one big uptrend from, where did it start? Oh, 69.50 to 72. So it went up $1.50 on oil today. Okay, back to the 5. Well, I could just show you this trade on the 15 even. Right here. Any time frame, ladies and gentlemen. Any time frame. Doesn't really look divergent, does it? But it is, see? It's going up. I mean, this one's going down. This one's going up. Do they line up? Yeah, right there. I'm off by a few candles, but it doesn't matter. I can move it. See, and right there. See? Right here. Wherever it lines up. Right there. 2 more candles. Boom. Okay. Come on. This is the 15-minute time frame. See up here? Up here? 15-minute. Now let me show you how many potential pips there was. Your stop would have been nothing. Next to nothing. You would have got long right here. Your stop was only like 17 ticks or whatever, and look at how far it went up. It went up over 242 ticks to the top. There you have it. Gotta love it. So that's the last trade for this video. So anyhow, I want to thank you for stopping by and checking it out. Thanks for watching. Thanks for listening. If you're going to continue to trade today, please be careful. And we'll see you tomorrow. Good luck and good trading.